Okay.
So we're joined from Jackson by my friend Martin White, financial advisor, financial expert, financial coach, leader of the Mogul Mindset, graduate of Jackson State University. We thank you so much for joining us today. We got a room full here with us at Velma Jackson High School. It's our personal finance class. And we're recording this for all of our friends in Madison County Schools, Madison Central, Ridgeland High School, Germantown High School, the Academic Options Center, and our YouTube channel. So thank you so much for taking some time out for us today.
No, man. Thank you. I really appreciate the invite. I'm honored. I'm honored.
That's awesome. Now, before we talk about all things finance, just give us a little background. I know you did go to Jackson State, also got a degree
Correct.
from Belhaven. So take us a little bit about your educational background.
Okay. Well, yes. So went to Jackson State University. Well, before Jackson State, I graduated from Clinton High School in the year 2000. So graduated from Clinton, went straight to Jackson State University. My very first major at Jackson State was biology. Right. So after a semester, I said, you know what, this isn't for me. I'm not a big science guy learning about the four founders of science and things like that. And let me find something that's more so suits me, right? And so that's where marketing and business came around. I was always in business, always interested in business. Even in high school, I would check out books about business in high school, and it got to a point to where I checked out this one particular book about business, and the librarian was like, "Listen, you got to let somebody else check this out for a week. If they don't check it out, then I'll let you have the book." So that happened, and she let me have the book. So did that at Jackson State, but I have to be honest, I wasn't the best student at all. Wasn't the best student at all. So that led to academic probation, academic suspension, where I was out of school for a year. So I found myself in my parents back in my parents' house in my bed, and I wake up one day. I'm like, okay, God, if I'm not gonna be in school, I gotta work. I have to do something, and I fell back to sleep. So my mom comes to my room like a few hours later. She's like, "Hey, you have a call from J.P. Morgan Chase," and I'm like, "Who, me?" And she said, "Yes." So I took the call, and it was a job offer in their college loan department. So that was my interest into corporate banking itself. So I did that for about a year. They got that division got bought out. So I transferred to Trustmark. I was the customer service agent at Trustmark. On the ninth month that I was able to be promoted out of that department and move around the company, a position came up in downtown Jackson in the corporate office. I applied
Wow.
and I got it. And I got it, which was the online banking representative. So somewhat like a teller, but it was strictly online. I would still take inbound calls. Customers would call in about balance inquiries, set up transfers, things like that, just general information about their accounts. That's what I did. So did that for about 7 years. In the midst of that, my father, he got ill, got diagnosed with stage 4 kidney cancer. Um, and I found myself like a rock with a hard place. Excuse me, because I'm the only child. So there were a lot of times, Greg, where my mom would call me while I'm at work to come back to our house to help her with my dad because he would have episodes due to his cancer diagnosis. So I would do that back and forth. And one day when I got back from work, my manager at the time made a statement that stuck with me and it never left me, and it hurt. But it also put me on my course to entrepreneurship. So I got back to work one day and she said, you know what, maybe we made a mistake in hiring you in this department. So I'm looking at her, and that was like the light switch flipped up, was like, you know what, regardless of what you have going on, you know, when you're working these jobs, there's nothing wrong with working a job, nothing wrong with that at all. But you're at the mercy of that company. If business needs increases, they need you. If the inbound calls increases and they're one person short, then that extra work for everybody else. So you're needed, right? And so I said, you know what? I don't want to be at the mercy of someone else. So I started reading books about passive income, wealth on the beach, from Tony Robbins to John Maxwell, to all of these financial people that are the experts in the industry. And got a call from a good friend of mine, man, who said, you know what, man, I think I have something that could benefit all of our friends and our family when it comes down to personal finances. So I said, I'm interested, like what I have to do. So I went to his school because he's a middle school principal in the Madison County school district. Shout out to Darian Knox. He reached out to me. He said, and I went down. I sat down with him, sat down with my now mentor, and they made it make perfect sense how someone like myself, who had at the time somewhat of a financial background, how I could become an expert, get all the licenses, get all of the certifications, and I could just help the people that I love and care about the most. So that was back in 2016. I went ahead, I got licensed, got certifications, all of that stuff, but I couldn't do anything with my licenses because Trustmark owned a company that does investments, insurance, everything that I was licensed in. So it would have been a conflict of interest. So February 9th, 2017 is when I made my departure from Trustmark National Bank. And, here we are now. I'm about 45 days away from being promoted vice president of this company. So,
Oh, wow.
I know that was kind of long-winded, but that's where I am.
Yeah, and you mentioned about having these licenses to help people understand finances. And look, I'm far from a financial expert, and I'm not expecting kids to be financial experts. But this is,
Right.
I've been having the same battle for years. This stuff is stupid. It's never going to apply to me. I don't need to know this. But these are the types of things, if you don't know, you're going to find yourself locked out of a lot of things. Like simple
Absolutely.
things, like setting aside a retirement account. Look, I want to pull my hair out when I see these memes about they need to lower the retirement age to 40. Retirement has nothing to do with age. It has to do with money. So
It's a
little
dollar
things
amount.
like putting in what the company matches, like that's free money that goes into your retirement account, and that's less time you have to work. So what are some little basic things that you're seeing that kids now, this generation, don't know that they really need to know?
Okay.
All right, so we had a little technical difficulty, but what I was talking about is I mentioned about retirement accounts, and while we were getting back on, I was talking to the class about that's something you can start at a young age. So, what are some other things as you've started doing this that you see this generation is really not aware of when it comes to just basic financial principles?
Man, as you were just speaking about the retirement account, retirement isn't at an age, it's a dollar amount. So the sooner that, whether you're a teenager, whether you're um, getting into adulthood, 18, 19, 20 years old, it's best that you start saving right now, right? I'm understanding the difference between traditional IRAs, traditional 401ks, and Roth IRAs and Roth 401ks. And that's so important because, the money that you put in, especially with the Roth, right? The money that you put in is taxed on the front end, but it grows tax free. And so the sooner that you start this process, with an IRA. IRA stands for individual retirement account. And 401ks are retirement accounts that you go work for a company like a Nissan or whomever that will issue you a company sponsored retirement plan, which is a 401k, right? But even prior to that, let's say right now, just saving and putting it in a money market account or an interest bearing savings account, whether it's $25, $40. One thing that I learned in this industry that I'm in is something called the rule of 72, which is you take the number 72 and you divide it by the interest rate that a savings account is paying that account. And that's one thing. It's just basic types of things like that a lot of teenagers, a lot of children don't realize that that savings accounts are supposed to pay you. Now, the interest is very nominal and small, but it's supposed to pay you. So the rule of 72 is a mathematical equation where basically it says take the number 72 and the interest rate that the bank is paying that account, and you divide it, excuse me, and that gives you the total number of years that it's going to take pretty much $1 to double and become $2. So if that savings account is giving you a 0.001% interest rate, where you take that number, divide into 72, that equals 7,200 years. It doesn't make sense for you to just put your money in a regular savings account if it's just giving you that nominal interest rate. So you want to place your money where it benefits you the most, and you can start there right now. Even if you're 13, 14 years old, your parents can get you a custodial account, and they can start this wealth building process for you. And another thing that I see is a lot of people would define wealth as having millions, billions, and trillions of dollars. No, that is subjective to what your goal is. Maybe your goal is to have $150,000 that you can easily access, 200,000, 50,000, whatever that number is, you get to define what that wealth parameter is for you. So we just, excuse me, small things like that, just starting younger, because a lot of times these are conversations that our parents have when we're much older, when those conversations should be had right now, right now, so that you can change your family's generation financially.
Yeah, and even small things like go ahead and getting a traditional checking account, getting some type of relationship with a bank. Having a
Absolutely.
Cash App card is not having a checking account. Um,
It's not.
I
It's
I use
not.
Cash App and it definitely has its place. But it is not the where I'm putting all my money and not where I'm going it's not where my paycheck goes. It's not where I'm going to deposit things. Because if you ever want to buy a home or buy a car or buy a business or buy land, you're gonna have to have some type of relationship with a bank, and that is something you can start doing when you first are able to get a job. Several of these banks have checking accounts for 16, 17-year-olds.
Absolutely. Student accounts. And you said something that was very key. Relationships. Relationships absolutely matter, whether it's personal relationships with your financial institution, because I'm pretty sure, your students one day, they want to buy a car. They're going to want to buy a house. They're going to want to buy, any type of asset, right? Whether it's land, commercial real estate, whatever the case may be. Having a relationship with your bank, or even if you have multiple banks, and it's like myself, I bank with Wells Fargo and I bank with Navy Federal Credit Union, right? And I have a perfect balance of mixture of accounts with both. But I also, not just with the accounts, I also can walk into Wells Fargo and speak to Jimmy, my personal banker, or I could talk to Beverly, which is the branch manager, and knowing them on a first name basis. And when it comes down to getting loans, whether it's a mortgage or things like that, they'll go to bat for you because there's the relationship there, as opposed to you just walking in day one saying, I want to get a mortgage, where there's not a history between you and their bank where they can go to bat for you. So that is very, very, very paramount and important, having that relationship. Definitely.
Absolutely. Now, something that I know I can speak for all the other teachers on is another issue that I see with teenagers is that they see all this TikTok stuff and the social media and everything,
Oh man.
these celebrities balling out, and as soon as they get a little bit of money, they want to just go buy something cool. And I like cool stuff too, but what are some ways that you can resist not just spending money as soon as you get it and finding ways to put some aside, and then when you have enough saved, then do something nice for yourself?
So the number one thing that I would tell your students is you have to realize that these celebrities, number one, they have a financial backing where they can go out and they can quote unquote ball out. They can go out and spend $500,000 on a car because they have 10, 15, $20 million, in the bank. They can do that, so as opposed to someone that doesn't have that financial stability or that financial backing, it won't make sense. In order to get there, those same people, they had to start somewhere, even before they got the big time contract, whether it's a sports player, NFL, basketball, baseball, whatever, they started somewhere and they started saving from the get-go. So you want to position yourself to, and you might not be able to buy a $500,000 car, but there's a pair of shoes that you might want to buy, right? That costs $200, where you can go and earn 25, $50. You earn $50, save 25 of it, do what you want to do with the other 25, but you want to start saving, because you start saving right now, then you'll be able to budget and allocate and take from whatever you have saved up. Let's say you've saved up $1,000. The shoes cost 200. Then, hey, you have the necessary money to go and buy the pair of shoes, as opposed to saying, okay, I have $200. I'm going to go buy this pair of shoes. Now you're back to square one and you don't have anything. Yeah, you have the shoes, but the shoes is a depreciating asset. As soon as you put it on and you step outside, dirt is on it. It's dirty, all of these different things. Now you're like, okay, I need another pair of shoes, but you have no money saved. So just starting small, 5, 10, 15. And I know these things, they don't sound cool, but these are the things that these TikTok influencers and these people are not telling you. And see, these things, they sound good, but as the old adage says, something that is too good to be true, or if it sounds too good to be true, 9 times out of 10, it is, right? There was a TikTok going around a few years ago from, and I'm pretty sure your students may not know who this artist is, but Waka Flocka, which is Gucci Mane's right-hand man. I'm pretty sure you guys know who Gucci Mane is, right? Okay. So Waka had a video going around saying, he puts his excess money in a life insurance policy, right? This is what he does. He puts in a life insurance policy, and it gains interest with them, and he makes all of this money. This was maybe 5, 6 years ago. Well, about 2 years ago, Waka Flocka came back and said, "Man, I lost $9 million doing that." See, it's things like this, and this is something that a lot of people in the insurance industry, they promoted to try and say, hey, if Waka Flocka is doing this, you should do it too. But they're definitely not promoting and showing the video where he said, man, I lost $9 million doing this, because I thought it was something that can actually make me money, because I heard it from somebody else. Somebody else told me that they were able to do it. I did the same thing. I lost money. They lost money as well. So a lot of these influencers, they'll tell you to do something. They're either not doing it, or they're telling you to do it because they're making money by telling you to do it.
Yeah,
But
and
they're
then
not
what a lot
actually
of people
putting it
don't
to
realize,
practice.
what a lot of people don't realize, a lot of these celebrities really don't have that much money. And just because somebody's famous doesn't mean they're rich. That is a huge, huge misconception. And we actually have an assignment
Absolutely.
coming about that in a couple months. But that is something that I think a lot of young people need to realize. Now, tell us about the mogul mindset. You've been very vocal in trying to change generational wealth, trying to change the mindset.
Mhm.
Of your local community. So tell us about the mogul mindset, what that stands for, and how that came to be.
Okay. So the word mogul is actually an acronym, and that stands for motivated, optimistic go-getters, uplifting lives. So, and I call myself the moguls coach, where I coach moguls to creating generational wealth and live what I call a mogul-minded lifestyle. And pretty much what that means is people who have a love for people, who want to help people get on the right track financially. Essentially, that's what it means. Or not just financially, but just get on the right track. If someone has goals and dreams, then it's my responsibility, it's my job to help those people bring those goals and dreams into reality. And I coach what I call moguls who have the same mindset as me to helping their friends and their family accomplish the same things. Because at the end of the day, I truly believe that God put me on this work to serve and not to be served. That's number one. So if my Lord and Savior, Jesus Christ, came on this earth to serve and not be served, then who am I to not follow in his footprints? And I do the same things that he did. So it's it's the purpose behind it is pretty much helping the next generation of entrepreneurs and leaders become entrepreneur and leaders so that they can go out and help the next generation of entrepreneurs and leaders. And those individuals are called the moguls, which at the end of the day, again, are motivated, optimistic, go-getters, uplifting lives. So that's where it comes from.
That's awesome. Well, I do have some questions from the students. These are really good. This first one is Shania
Okay.
Smith. She's in grade, one of our volleyball players here. And she
Thanks,
asked,
man.
what she asked, what about your job do you enjoy the most?
Man, wow. So number one is talking to people, meeting people, talking to people, meeting them where they are. And coming from being on the opposite end of a table, talking to somebody, to being on the same side of theirs, right? Because one thing when it comes down to finances, and as you guys grow older, you'll realize this and you'll see this. Finances is one of the most insecure topics that adults want to talk about because of the mistakes that we've made in the past, right? And I can speak to that because I was there. And what I mean by that is in college, I would go to check cashing places. I would have 6 or 7 open accounts with different check cashing places, and I'll open another one to get the money to pay another one, open another one to get the money to pay the other one, just financially irresponsible, right? And just making those mistakes. I've had tower loan accounts. I've done all of these different things. So when I have conversations with people, I can see their anxiety flare up because they don't want to admit that they've made these mistakes. So I get to have not just a conversation, but become relatable to these people and say, you know what, I've been there, I've done that. Here's how I overcame, and here's how I can help you overcome as well. Don't be embarrassed by these mistakes. Accept them because you can take these mistakes that you've done and that you've gone through, and you can impact and you can influence someone else who's been in the same shoes to let them know, hey, it's okay, and I can overcome and I can succeed and I can win. So the best thing about what I love with my job is just simply helping people at the end of the day.
Absolutely. This is Edward Flowers. He's in 10th grade, member of our band here at Velma Jackson. And
Okay.
he asked, what would be a good goal, a good financial goal for someone to set while they were in high school?
Awesome. That's a great question. Great question, Edward. So I would say a good financial goal is to start with $500. At first, I was going to say 1,000, but in high school, some of you students may be like, you know what, that's inconceivable. It can happen. So I would say start off with the goal of $500 and just have it sitting there in an account. Just have it sitting there because once you have that 500, and you see the feeling of how simple it was to get the 500, now mentality, mindset wise, you're like, okay, I can save another $500. Now you have 1,000, right? So just getting in the habit of saving, I would say again, that $500, let that be the benchmark. Once you save that and you have the feeling of what it took to save the 500, then you can stretch that goal and you can make it bigger.
Absolutely. And again, I'm not expecting these kids to become experts overnight, but just knowing the simple things can make their life so much easier as they navigate after high school to whatever path they take. And we're gonna hit on that again here in a second. Um, this is
Absolutely.
uh, this is Christopher Maxwell. He's in 10th grade, and he asked, "What is the best way to make sure to make sure money is saved in my banking account?"
The best way, and ask that question one more time. The best
What is
way
the best
to
way to what is the best way to make sure money is saving up in my bank account?
So the best way is number one, if you have a bank account, is to make sure you have mobile bank. That's number one. I wouldn't say check it every day, but if you have your money in a savings account itself, or even in a checking account, you can log in and you can check and see, okay, has there been any interest gains? Or if you went to the store and you bought some chips, right? Or you bought, a soda or whatever the case may be. Then as soon as you do that, you can log into your mobile banking account and you can see the deductions, you can see what you spent, and you can see that's deducted from your account itself. So you want to, on a consistent basis, look at your accounts. And once you see your accounts and you see, okay, I started with $200. Now I have 150. Okay, I need to scale back. I need to stop spending so much because this $200 was for a particular reason, right? And that's another thing to answer your question. Set goals for yourself. Set financial goals for yourself. So if there's something that you want, a lot of you guys, you're getting ready to go to college. There's going to be expensive college. There's room and board. It's going to be food. It's going to be books. It's going to be all of these different things. You want to start saving now. So if you know that your books is going to be an estimated $400, set a benchmark. Well, okay, I have $1,000 in my account. 400 of that is going to go towards my books, and then you can start saving and allocating more money towards other things itself. But the main thing is making sure that you're staying active, you're staying proactive and intentional with keeping track with your finances.
Absolutely. And that's a great segue to this last question. This is Levon Johnson. He's in 10th grade. And he asked, what is the best
Okay.
method? What is the best method to make sure I start saving correctly?
The best method to start saving correctly. So I truly believe it all starts with setting goals. And once you set that goal, and this is for everything, whether it's finances, whether it's, whatever major that you're majoring in school, the organizations that you want to become a part of, the friends that you want to have, all of these things, you want to set goals, right? Write them down, make them plain, and stick to review over them on a daily basis. So in regards to the finance part of it, the money part of it, excuse me, you want to set a goal. That's the number one key is setting a goal. Now, the hard part about setting a goal is sticking to that goal. So with that, it becomes being disciplined to staying true to what you set out, right? Because at the end of the day, nobody can have more importance about you hitting your goal than you. You can tell it to your teacher, you can tell it to a parent, you can tell it to your pastor, you can tell it to your best friend, but they're not there actively making sure that your goals are becoming a reality. You have to do that. You have to do it. So you can always have accountability partners, of course, like your parent or a teacher or someone whom you trust. And I would advocate and I would encourage each and every one of you to have an accountability partner to hold you accountable. If you say that you want to save $2,000, okay, well, those drawings that's coming out at the end of the month, you can't get. You can't do it because you have a goal to set, right? As you might want Chick-fil-A today, where you might not be able to, get the 12 count. You might get the 6 count. Save you some money in order for you to reach your goal. So at the end of the day, setting that goal, having somebody that's going to hold you accountable to making sure that you reach that goal. And at the end of the day, once you reach it, trust me, you're going to feel so much better about yourself because it's not necessarily that you have the money there. It's the feeling that you have where you're like, you know what, I did this. I can do it. And if I can save at this level, then I can save at the next level.
Absolutely. Well, we're almost out of time, and we thank you so much for taking some time for us today. But
Oh, man,
before we
thank
go,
you.
you're always welcome. But before we go, you'll never hear an argument from me that for a long time, the Black community was left out of financial knowledge, especially the rural Black community and all over the state of Mississippi and other parts of our country. But times have changed, access has changed, resources has changed. So, the generations before these kids now maybe could not have been taught. Maybe they didn't know. Maybe nobody ever took the time to tell them. So they didn't know about these things. And that's not their fault. But why is it so important for these kids to really understand how important these decisions and these principles are as they get ready to navigate from high school?
Man, that is an awesome, awesome question. That's a whole nother 30-minute conversation, but I'm gonna skim it down a bit. So number one, let me go back, way, way, way back, even before me. Um, Back in slavery days, right? Slaves were considered property. Property, right? Okay. So just follow me right quick. Students, follow me. So I'm in the finance business, insurance, finances, all of that stuff. So back in slavery, slaves were considered property. Now, back in those days, slaves could not purchase insurance. The owners of the slave could. This is where property and casualty insurance was created. So just think of this for a second. Just think of this for a moment. And we're talking generationally. And you know, Mr. Greg, he brought up a great point when it comes down to, African Americans, Black Americans, and finances, and why the wealth gap is so wide and why it's so important right now for you to catch this and get it now. Um, so just generations and generations. Let's say that you know a owner had 100 slaves and he had a $100,000 life insurance policy on each 100 of those slaves. Well, you're talking millions upon millions upon millions of dollars that's been passed down from one generation to the next. That we were not privy to participate in that wealth, but now we are. Even if we're starting at the ground zero, we still have the everything that you need to become wealthy is between these ears right here. It's right here. Everything, literally. If you come up with an idea today and you form a plan and implement it and you take it to market, which is the marketplace, which are to consumers like myself, like Mr. Greg, like the other teachers, like everybody else, we're all consumers. And it's revolutionary and it enhances and improves the lives of others. Then guess what just happened? You become wealthy overnight, right? But the thing about it is we have to make sure that we're patient in that journey. We can't expect to become wealthy and rich overnight, right? We cannot expect that this thing is just like a microwave. We put a frozen good in the microwave. We press 2 minutes, 3 minutes, or whatever, and then it's hot and you're able to eat it. That's not how it goes. It takes time. It takes time. And the great thing about it is, even in that time, you learn more about yourself, even during the mistakes, the roadblocks, the hurdles, everything. You learn more about yourself and what not to do than anything else, which is a great thing because now you can share those stories with your sons, your daughters, even help your parents who weren't privy to this information. You can help them make better financial choices. That's something that I was able to do with my mom and with one of her life insurance policies. She had one where if she stopped paying the premium, then the life insurance premium will start coming out of the money that she saved in the policy. And once that policy got to zero, then the policy canceled out. So I was able to explain that to her. She was like, "Oh no, I don't like this," and I was able to get her from out of that policy into another one that benefited her way more, right? So, just listen. If you don't take anything else, if you don't take anything else from what Mr. Greg is doing or anybody else that you take courses with when it comes down to personal finances, start now. Don't start tomorrow. Don't start when you graduate high school. Start now. If you don't have an account at the bank, that's okay. Ask your parents to take you to a bank, the closest one to you, and get a student account opened up for you, right? A custodial account open for you. And any money that you start to bring in and save, that you start to bring in, you can allocate and you can save. You can give it to them and they're depositing into that account, and it will start to become a nest egg for you for your future.
Yeah, especially because several of these are wanting to start working soon. A lot of those banks in Canton, right there in downtown Canton, have the student account. So there's never been a better opportunity to get a leg up on this.
Absolutely. Definitely do it now. Start now.
Well, again, Martin White, we thank you so much for joining us today. Apologize for the technical difficulties, but that was some good stuff. And also, I agree. Big shout out to Darian Knox, my guy.
Shout out to D Knox. And shout out to Chad Ford. I believe he's at Velma Jackson, Coach Ford.
Not anymore, but yeah,
Gosh, okay.
you're dating yourself on that one. But we appreciate it, Martin White, Jackson, Mississippi.
Pre-
Talk to you soon.
Talk to you, man. Appreciate you.
See ya.